Our next guest says big tech companies have to deliver almost perfect results as investors get choosy about which ones to reward. And this bodes not too well for Apple today. Joining us now for more is Daniel Newman, CEO of Futurum Group. Thank you for being here, Daniel. So dispersion, a lot of people say that's a good thing. But if you're an investor and you're in this market where investors are getting more choosy, as you say, how do you kind of know the good apples from the bad apples, not to use the well-known idiom there?
Well, right now, the apple is seemingly the bad apple, and investors are running away. We've seen the Nvidia trade, and that's even getting a little bit tiresome right now. You're seeing investors are getting a little bit fatigued. You saw Meta had a great result, and then investors ran away because they had too much capex in a future investment of Reality Labs. Everyone right now wants perfect results. They want super fast growth. They want an AI strategy that they can see the monetization path. But at the same time, they also want to know that these companies are managing OPEX well, that they're dealing with the macroeconomic situation in a way that doesn't put them in a position where if all of a sudden we see a turn, we see interest rates suddenly pop even higher, that these businesses can't continue to grow and then deliver these high EPS. And heck, they're even throwing dividends in now just to try to lure investors into the fray.
Can you still call Apple a growth stock? And if you can't, what does that imply for the multiple and for investors?
They aren't showing the trend line of being a growth stock right now.
And haven't for a long time.
No, they really haven't. And right now they're behind on all the trends. And they have been for some times, but they've gotten away with it for quite a long while. And so all of a sudden they're saying, what is their AI strategy? Do they have one? Are they turning to Google? Are they turning to OpenAI? Is that really the best that Apple can do? And right now, if I was putting $1 somewhere, I'm looking at Microsoft. I'm looking at Google. I'm looking at Nvidia. I mean, even AMD showed great results growing their MI300 product, and Qualcomm are showing some compelling opportunities at the edge with AI. I'm not putting $1 into Apple right now.
But if you're seeking tech stocks that are already, kind of delivering these perfect results, how are you able to get a good deal and provide a return in the future? Is that perfection, in other words, indicative of future returns or better future returns? Or are you better off looking for those that may have kind of missed the mark a little bit, traded down, buy on those dips, and then capitalize in the future?
Well, I think what's going on is investors are just in this kind of pause moment, Leslie. They've seen that the macro environment isn't really as stable. These jobs numbers are a little bit flimsy. We see how GDP isn't growing. Companies have been really rewarded for lowering OPEX. Right now, they're being looked at to have a perfect blend of CapEx spend. So you've heard that in the last few weeks of earnings. And so there are some companies that had multiples pull back. You heard me mention Qualcomm just now. Their multiple compared to several of the other chip stocks that they're being compared to was much lower. So when they came out with some good news, they showed some stability in their handset business, and they showed this boom in their automotive business. And people are saying maybe there is an AI story there. We'll pour into it. And I think it's up like $15 today. It had a huge jump. And that's after several quarters of really falling. And so that's the kind of things that investors are going to be looking for, whereas in Apple is, there's no story. There's no AI. Their handsets are declining, and their situation in China is really, really constrained.
And it's not just their handsets, and it's not just one quarter. It's their iPads. It's Macs. And everything. We had a graphic up here of the revenue declines, and they're really quite something. What can they do to turn it around?
Well, I do think the leak on their next M3 chip was a bit interesting. You see all the momentum for AI PC right now. We heard Intel, which had a tough quarter, but actually did show 31% growth in their PC business, the client business. And then AMD had an 80+% growth. This AI PC trend is real, and Apple almost missed this one. So you heard them leaking this next generation chip, which is going to be their AI-enabled PC equivalent. But I don't know if there is a quick fix. And right now, with China showing its constraint, showing its strength against the U.S. companies, I don't know. Maybe Tim Cook needs to pull an Elon Musk and head over to China.